IPO aiming to strengthen its technology platform, invest in marketing initiatives and repay the borrowings. My colleague Sajid spoke with Sahil Goyal, who's the MD and CEO, and Tanmay Kumar, who's the CFO of Shiprocket, to understand the company's growth roadmap ahead. Let's listen in.
Shiprocket is India's largest e-commerce enabler, where we basically are trying to get merchants and small businesses from all over India, right, from whether tier 2, 3, etc., to get them access to be able to sell across pan India and pan world, right? So we are enabling them to basically enter commerce, and we give the tools for them to do that, which include obviously shipping enablement, because that's a big part of what needs to be done, as well as helping them with checkout and helping them with advertising. So it's a full sort of end-to-end enablement platform that allows merchants to run their business digitally. It's a very simple business model, right? We basically are the software layer and the data layer on top of which all of these merchant workflows and their business use cases work. And then we integrate into over 250 ecosystem partners, including courier companies, transportation companies, payment gateways, advertising platforms, and so on, so that all of the work that the ecosystem has already done around specific verticals continues to happen, and we are able to bring merchants into the fold to get access to these ecosystem players using our technology and data platform. So that is essentially what Shiprocket does.
And do you have a linkage to the consumer as well? Is it B2C or B2B in that sense? And what is the kind of transactional fees that you charge these customers of yours?
So it's a B2B platform, except that our merchants are very small. So we are going after the 6 crore retail MSMEs of India, out of which we have powered about north of 200,000 so far. So it is B2B, but it is very small businesses in that sense. And the model is entirely consumption based, because Indian merchants want to kind of buy software which allows them to kind of spend when they make money or spend when they save money. So I think the platform was designed on that insight. We've been 14 years in the making, and we realized this over time. So the platform is built in a way where merchants actually pay us for shipping. They can pay us for a checkout transaction. They can pay us for sending a WhatsApp, and otherwise the software that is given or provided to them is entirely free. So that way, merchants can manage their business easily, and then as they consume these services on the platform, they have to pay.
Tanmay, come in here and give us a sense of the fund utilization that you're raising. You're raising 885.5 crores in primary. What is it going to be used for?
So we're going to use this for three things. One, if just going back to what our business is, there are two segments to business. One is core, which is very profitable. The other part is emerging, which grew at 65% year-over-year last year. We are going to use the proceeds to invest in people and in technology to continue to grow the emerging part of business. That is a significant part of the use of proceeds. We also have a small debt of about 210 crore that's going to get repaid. So largely the focus is on investing in people and technology for growth.
Give us a sense, Sahil, about the kind of growth levers that you have, because you've been growing at a CAGR of 20-22% for the last few years from a top line point of view. What kind of growth momentum you can get and the opportunity that you have in this space?
Yeah, I think we've been building this for over a decade, and in this decade we have seen that small merchants forming a part of commerce from nearly nothing has become today a very meaningful part of the total e-commerce pie, right? And only 8% of India's retail has gotten digitized compared to our global counterparts. So there's a long kind of headroom, and lots of things need to happen in the coming years. So I think the way to think about growth in our business is, if you look at the two segments, as Tanmay also just described, There is our core business, which is profitable and has been for the last several years. And then you've got, this emerging business, which is growing at a very, very fast pace, where we are going to the same merchants and basically enabling more parts of their business, right? So I think, it's fair to assume that there's a very large market out there. We are, the number one player in this space, and our core business is highly profitable.
And from that point of view, how should our investor look at your company from a valuation point of view? From a net loss point of view, yeah, we know that you've been trying to narrow your losses, even EBITDA losses have been narrowing. But from an investor's point of view, what kind of runway that is in front of you, and when do you see yourself becoming EBITDA positive or a PAT positive?
See, I think I'll answer part of it, and then Tanmay can also add. So the company is already cash EBITDA positive, or operating cash positive. So we are able to kind of make our own investments into our emerging business for growth. And I think the goal is to be able to solve this problem for Indian merchants, and really be able to give them what they lack today. Right, and on that journey, right, it's what's more important is that how many merchants who today are left out of the fray and they are not able to participate in commerce. It's really about getting them, which is where the company's focus is. And we have constantly, block by block, step by step, worked with these 2 lakh merchants over the last 10 plus years and solved their problems one by one, right? And that is what the company continuously does. And the rest is obviously, it comes out as outcomes in the business. So I think our focus continues to be on delivering that problem solving, to the market, and continuously bring more and more merchants into the fold.